All right. Welcome everybody to Monday morning call with Paul. I got my special guest here, Anthony Ferguson. Super excited, bro, to have you on, man. Thanks for jumping on.
My good brother, how you doing, my man?
Good. So to kind of start off with Anthony and I, we met at our practice company and we were discussing about 10 minutes ago exactly how we met. We couldn't figure it out whether it was in the San Jose office or at the nightclub. Pretty sure it
It's
was at the nightclub
50-50
because
back
there
in the
was
day, bro. 50-50 back in the day.
think it was 90-10. We were partying. Back then, that was like the thing after work every day, go have drinks,
hmm
being in the field and then cutting to the nightclub or to the bar after. But anyways, man, known you a long time. I could honestly say you're a great guy, a good friend, and somebody I've always respected for in this field. Like you've always been consistent, you know what you're doing, and I think a great leader, man. You know, all around great leader. So thank you for jumping on. Really appreciate you.
Thank you for having me,
Uh,
man.
so we're gonna do something a little bit different today, guys, with Paul's call. So we're gonna go over pivoting today, but we want you guys to put in the chat situations that you have a hard time pivoting from. So while we go through the different scenarios we got for you, throw in chat what types of problems that you have when pivoting with a client from a one scenario to another. All right. With that being said, Anthony, let's talk about health, right? That's usually the biggest issue when coming to having to pivot, whether you're doing mortgage protection or, final expense going from a term to a whole life. A lot of different scenarios in that situation.
Yeah,
What's
let's
one of
talk
the
about
ones that, huh?
it. Yeah, let's talk about it.
Yeah. What's one of the most common scenarios that you and your team kind of run into?
It really depends on what kind of lead that you're using. A lot of my team are split between the mortgage protection, between final expense.
Yeah,
To help us out with that, we all love toolkit. I don't know about you guys, but put a one in the chat if you do love the ability to use the software known as toolkits.
I love it. Yeah.
Yeah, yeah, we see the ones blowing up. Me and you, Paul, can remember even before toolkits was around, when we were actually in the field face to face, let alone not, without even having all these options, it was the biggest stress to know, hey, which way do we go? Especially when we
'Cause-
first joined this organization, how do we decide which way to lead with a client? A lot of the easiest way to do it is honestly play dumb. Fake it till you make it when you're in the very beginning. I'll tell my agents act like and accept the title of you a senior underwriter, you're a senior sales agent, you're a senior insurance agent, whatever you go by as far as in your profession, to make sure
Mhm.
you know that you have the toolkit available to make you sound honestly a lot more experienced than you may be. Just put in these
Right.
certain health conditions, just follow along what it says, and you're pretty much good.
I know for me, when I was a brand new agent, the thing for me was whether we were at our practice company where we only had kind of one product to sell, right? Uh, versus here with multiple, it was still more about what to say, the right time to say it. For
Mhm.
That's what the biggest transition for me was when I was a new agent.
Oh yeah, oh yeah. Especially I did have had experience honestly with other agencies. You know, I've had like me and you kind of discussed. We've been in the game for a little bit, so I've had
Mhm.
experience with other agencies. And the toolkit is something that's very recently, in my experience. I was brought up in the game, at least coming over here at FFL, where we were taught to maybe go with one specific company and then pray that
Yeah,
they're going to get approved,
and
pray
if
that they're the
not,
best
then
possible rate,
pivot. Yeah,
and then go from there. And even with that pivot, we never really necessarily knew where to pivot to. It was more so
yeah,
to go, hey, try this, pray it works. If it
yeah.
doesn't work,
It was
try this one, try
Americo
that.
first, and then go to the next one. Yeah.
Yeah,
Harold
yeah.
just put in the chat. I just saw it that a lot of agencies still do that.
Yeah, that's what I've heard, man. We haven't had
Yeah.
used it for a while, so I honestly couldn't imagine without the toolkits. I do remember how stressed that used to be to just, hey, go with
Mm.
the miracle and honestly pray for the best.
Well, let's say I'm a client, I'm in my mid 40s or something of that nature, and I want the full payoff, right? And we kind of get to that point, and then somehow I get declined, right? Whether I had cancer 6 years, 7, 8 years ago, right? Something. What would be the next move for you to pivot to, a final expense versus a term policy? And
Yeah,
what would you call it?
yeah. So first of all, let me at least say the kind of the understatement. A lot of the times when we're our training agents, we never want to have to ask the client twice. We've already asked them previously. So that should be already an understanding kind of way to going about it. What I
Mhm.
mean by that, whatever you kind of call it, your client assessment, your notebook, your client tracker, we always train our agents to just be professional, have the credibility. Where if a client tells you something, You want to be able to write that down somewhere or type it somewhere as you're actually putting it into the toolkit. And we'll pull up the toolkit example. So just so people who might not be familiar with what that even looks like, if you've never been honestly blessed to have that ability to use that software,
Yeah.
while you're putting things into the toolkit, you want to be able to have that information down. So just in case you do need to pivot, you can be able to just move everything over. But even better, using the toolkit, when I first started, yeah, it was good for me to be able to have everything down. So I don't have to re-ask you, hey, Mr. Paul, what
Hmm.
was your height, weight? What was the name of this medication? When did you get diagnosed for X, Y, and Z? I don't have to
Right.
be real typing it out. Now with the toolkit, we'll be able to just save whatever we put in there, load it up on the other side, and keep it pushing. Do you mind if I pull up an example of what that looks like, Paul?
No, let's do it. Yeah, absolutely.
And we'll keep it real brief here for you because I know you have a busy day, man. Thank you for helping us out. All right, so this is an example of the toolkit. I already have everything logged in. Just to keep it real brief on here, with the toolkit, they separate it by categories of the products. So it doesn't matter how you kind of explain it to a client, because obviously we do have the luxury of being licensed agents where we went through these steps to be able to know exactly what a whole life, a term, IUL, X, Y, and Z. The average American citizen, the average person that we're actually providing this insurance coverage for, they might not know what that means. So we actually explain it in certain methods, right? So no matter what we actually explain to the client, we know if it's either going to be final expense or i.e. whole life or a term product. Let's say if we're speaking with somebody who might be in this example, this person is 37 years old. We think they can get a term product, which if we're talking about a mortgage protection lead, that might be a payoff, right? For
Yep. So
whatever
it'd be
reason,
let's say 30 year.
yep, example 30.
And yep. And then let's say that the coverage is, I don't know, 250,000, right? Talking to somebody in the Midwest. Um,
It's coming up with all these options. And these are some good rates to be a 30, a 250,000. And if their budget allows it, they have this good ability to have the return of premium, just to speak on it, just because I love this option real quick. Well, not only do they
and
get their actual coverage, they get all the money back at the same time, but plenty of options basically.
yeah.
But let's
So
say, yeah, go ahead.
let's say I had cancer 8 years ago
Mm-hmm.
or 6 years ago.
Mm-hmm.
And then now we have to pivot from a total payoff to a um, basically a pay down option, which would be whole life, right? So just to kind of let for people that are not with us or brand new and don't understand, uh, pay off versus payment is where it would pay the mortgage for a set determined amount of time. So let's say 1 year or 2 years, it would give, let's say it's me, my wife, a year worth of mortgage payments so that it gives her time to make financial decisions. She's not rushed into anything, right? She, she has the option of refinancing, or maybe she wants to sell the house. That way she has time to sell it. She doesn't have to take the first offer. Basically, it just gives them breathing room to grieve over the person that they lost and then get their finances in order. Is that what you be your conversation would be with the client?
Fair to say, one of my easiest one-liners that I use, if I realize that, hey, because of their health conditions, because of whatever extenuating circumstances, they can't get the payoff, I like to say, as far as the payment goes, covering the monthly mortgage, I explain
Mhm.
it in a certain way of saying, hey, we're going to make sure, Paul, that the last thing your family is worrying about is having the monthly mortgage taken care of immediately. So, of course, we
Right.
like to say, hey, to be able to buy time to X, Y, and Z, you could further explain it. But the easy one liner, just to get them to kind of just gear switch on their brain because everybody's so, sold on their brain, this is what they want. Hey, we know
Yeah.
that's what we want, but we also have to live in reality. So easy way to explain it to a client is what we're going to do to make sure is that the last thing the family is worrying about, Paul, is that if something were to happen to you, God forbid, you have the immediate funds available to cover that monthly mortgage for a certain amount of time. But the last stress of the family we're going through is where that money be coming from. Is that fair enough for our strategy, Paul, to make sure the last thing that family is going to be worrying about? Who's going to say no to that? So that way,
Nobody.
automatically,
Yeah.
you're switching that to a client to know, okay, perfect. So where we're about to discuss right now with whoever I'm speaking with, myself or yourself, whoever their agent is, we're making sure that by the time we got this call, my family's coverage for the actual monthly mortgage.
Right. Roll one in chat if you guys like that one liner. I think it's gold.
Yeah, just always a way to further explain it. That's like an easy, quick one, too, just to kind of gear switch their brain.
Yep. All right. So go ahead. Tell us how exactly the pivot works here.
It is very simple. First of all, obviously, I'm gonna keep saying this so many times because I've seen it so many times when it's not discussed. I am copying everything that I'm putting from the toolkit. I'm copying it into my client assessment, my client tracker, whatever you want to call it. So in the very worst case, I can easily be able to just move over to the next category, copy it down. Now, if you're familiar with this because you've practiced it enough, you realize that they have these little clever buttons on the bottom.
Well,
So,
let's throw in the medication. Let's throw lisinopril, atorvastatin, just so people can kind of see, right? And
all right.
then leave it at that. Um, and then that way they could see how it looks on the next field.
All right. Let's see. We want to do you say Losartan or Lucena Pro? Which
Sure,
the
go with Losartan. That's fine.
Losartan?
Yeah,
Okay.
Losartan and just do high blood pressure.
Let's say they have high blood sugar pressure. We think it's controlled.
Yeah.
Let's say they were diagnosed what a few years ago, give or take what, 5 to
Yeah,
10
that's
years, something
good
like
right there.
that.
Just say 15. Yeah.
All right, we're gonna hit get quotes. We still got some options.
Yep. And then now let's go ahead. That's we only need to put one. Now let's go to the
As an
other
example.
side. Yeah, just so they can see how it works.
So how we're gonna go about doing it is hitting this little save button.
Hmm.
Now, whatever we put in here, the worst example is, I don't know if you guys have ever experienced this. You spend 20 minutes collecting medications. There is a
Hmm.
long list of things down there that you are just looking at it with pain and angst. I do not want to have to copy all this stuff down on the next page. You're gonna
Right.
hit that save, go up to the categories you're in, final expense, hit that load. I always have it on the downloads of the most recent. And then it should pop it back up. There it is. Oh, almost made me look a little bit like I didn't know what I was talking about. So it might take a couple seconds, but have faith in the system.
I got
And
it.
then that's where you go. You just hit the get quote, and now you're updated with all the options that this client can now do. And then when you hit the get quote, you'll be able to go down. Now, if you notice what's wrong here, we still have this coverage amount. So you always got to keep that in mind. I like that addition, that example, because we want to blank out that coverage amount. Same have the same criteria as far as the health conditions, just so we can see all the carriers that's available with this. So even though this client has these things going on, we still have more options to be able to show them, as well as for a much better rate, just to make sure we can also fit within their budget.
Okay.
Does that make sense,
Perfect.
Paul?
Yeah, absolutely.
Perfect.
Maybe if
Unshare
you
my
could
screen.
unshare, yeah. And then
Well, yeah.
yeah, let's kind of talk about that, right? So let's say the client, right, pays $1,500 a month, right? What's the process of figuring out how to pivot, uh, and then knowing what pitch you're going to give after the pivot, right? So we got the one liner, right? But before we get to the one liner, we have to figure out, okay, what is it that we're going to pitch them, right? So what's your process for that?
A lot of the processes are, first of all, to knowing, obviously discovering what the client, what they have available, what's their health conditions, what's their age, what's their finances. And then you also want to know, to be honest, what are our carrier options? I am a big believer in honestly cheat sheets or quick coverage amounts. There are different ways you can go about it as far as like you mentioned with the actual income, if they make a certain kind of income, or let's say if the client might be a certain kind of they might need a different way to be able to sign their actual policy or their application, where they might need to be able to have a certain kind of text authorization for their carrier or whatever the case may be. So a lot of times how I like to do it, I'll have a little cheat sheet. Do you mind if I drop it in the chat, Paul, as far as the cheat
No,
sheet for the
Jim,
carriers?
man, absolutely. This is
Oh,
what this is for. This is for them.
okay.
I'm just the good looking one up in front that they put in front of the camera, you know?
So in the chat, that is a little cheat sheet as far as how I go about going, my process of which carrier do I go with. So if it's income, you might need to know, obviously, like you just started off with, of hey, we want to find the lowest possible rates possible for the client to make sure it fits within their budget. So that also might decide, hey, even if they say they
Hmm.
want X, Y, and Z, once again,
Hmm.
black and white, ones and zeros, what's the reality? Let's be able to find something that client can not only afford, but that keeps it long term. We don't want to just make sure we have it with the best sounding coverage, with the highest premium, so the highest AP. It doesn't make sense for the client if it doesn't make sense for them long term. It doesn't make sense for the agent if it doesn't make sense for you long term. We want to make sure the client actually sticks with it on the books.
It just boggles me. In a lot of different agencies, agents just they're so fixated on the higher AP, and then they wonder why they have such a high rate of chargebacks
Mhm.
because people forget one, it might not be affordable for the client, right? And if you're doing right by the client, good things are going to come to you. One, the client's going to realize it because you're not the only one hitting this client up for mortgage protection or final expense, right? And so the people that come in behind you, they're going to do their darndest to pitch them something cheaper so that they can replace it. So why wouldn't you
Exactly.
just do it the right way the first time? Don't get it, but
Exactly. Exactly.
I'm glad you bring that up, man.
Yep.
Um,
Go ahead.
so go explain your cheat sheet a little bit more in depth, right?
So I try to organize it a little bit by categories just because we do know it's overwhelming. That is a
Hmm.
good thing about being a broker now. You're not a captive agent any longer. It's not like you have one option of a carrier and you're praying that is the best possible option, as well
Hmm.
as the best rates for the actual client across the board. So we can be able to pick and choose between all the various options. But this cheat sheet kind of narrows the gap a little bit. It's not too much kind of just, throwing a dart against the wall. So the first one is the text authorization code. That basically means, let's say if you're speaking with a client who might be a senior, and you kind of get those kind of signs as far as when to pivot to a text authorization carrier. If I'm speaking to a senior who she jokes around with me all the time saying, hey, I don't agree with technology. My kids barely just text me. This is a standard phone just in case of emergencies with an SOS. Okay, in my brain, I'm going to avoid the carriers that have the most, honestly, maybe a little bit more complicated for the clients as far as the e-signature process goes, just so you could be able to make it a little bit easier for them. And
Yeah.
examples of those are Americo, Aetna, and Aflac. Easy carriers where all you do is just say, hey, this carrier, Aetna, will be sending you a text authorization directly to your cell phone. When you get that text message, it's going to include a 6-digit authorization code. Go ahead and read those numbers out to me. Very casual, nonchalant. It's just the way the actual process works as far as how you're delivering that message. You send them the text, they get you the 6-digit code, you're done. You just wait to see if they're approved. With Mutual of Omaha and American Amicable, they also have that ability to send them a text, but for those, is the actual link to the application. So it's
Yeah.
not 6-digit numbers, but it helps out the process, so it avoids the middle ground of having to them to figure out, hey, how do I get in my Gmail? How do I
Mhm.
get in my Yahoo? I don't even remember my email name to be able to send it to the client. Okay, I'm sorry, we don't have time for that. As far as in my brain, I know I don't want to spend 45 minutes with helping you sign into your email. Let me just send you this
Yeah.
link. The next one is direct bill. To be honest, we want that to be the last resort, to be honest. A direct bill basically means, for those who don't know, it means that if a client is honestly maybe refusing to give you their banking information for whatever reason, some people I honestly can't blame them. They might have had some kind of banking issue in the past. What doesn't matter how good I love you, Paul. You sound like a great
Mhm.
guy, but hey, I've been burned by this thing too many times where I love you and I wish I could trust you, but I got to protect myself. In those kind of situations, I don't blame you. If you were my friend, my family member, I'll tell you to do the same thing. So when
Mhm.
all else fails, you technically have the ability to still submit a policy without the banking information. But as far as a heads up, you will have to be on top of that client, to be honest, every single month. The few times that I've done it, I've literally had appointments in my Google Calendar, like I'm going to have an appointment for a new client, but I only have that to remind my client, hey, look out for that bill, just to make sure you don't lose your coverage. But that's what that means. So with these
Yeah.
carriers, you can be able to write up a policy without having to worry about collecting that bank account. Does that make sense?
You're better than me, Anthony.
Well,
I'm
like
not chasing nobody.
it's one of those out the goodness of my heart. You know
Yeah,
what? I
yeah.
spent an hour speaking to you. You say that you really want the coverage. You've been searching for so long. Out the goodness of my heart, because I
Yeah.
had a good day today, I'll
Mhm.
take the time to do this. And
I
just
mean,
hope take it seriously as well.
let me preface that it's worth it, but I just know me, it's not gonna happen.
The second I said that, I know how many agents on this call. Also, you watching this call later on, like who in their right mind is going to do a direct bill?
No,
But
man, I know a lot of agents, especially the old school agents that used to do it that way. You know, they would call their client and remind them back when it was, paper, paper applications and, remind them. And yeah, it's not something I've never not heard before. You know what I mean?
I
And
like to
hell, if
refer to
it
that tools in your tool belt. I rather have it and I need it
absolutely,
than
man.
did not
And
have it.
I,
Why not just know you have it
why
available?
not make a call once a month for 9 months so you don't get your charge back, right?
There you go.
Yeah.
The following one is Direct Express. That basically means that if someday they have Social Security, with Direct Express, you're mostly going to find that in more the senior people, the final expense type of leads. You're not going to come
Mhm.
across that too many times with mortgage protection because obviously, if they have a house paying a mortgage, they have some kind of major bank, credit union, major bank, doesn't matter. Direct Express basically means that they have the card that the government pays their actual income. So they don't have the actual income direct deposited into a bank account where they can use EFT or electronic funds transfer. They have to
Mhm.
actually have a card where they get that card number like it's a credit card, but it's attached to the actual system with the government. That's what that means. So if you're
Right.
speaking to a senior and they say, yep, I do a Social Security or I do Direct Express, I don't have a major bank. I have people that say, hey, yep, I put my money under the mattress. The government just pays me in the card. Not a problem. I'm not going to argue with you because I know I have these options. I'm just going to pivot over to, let's say, Corebridge, formerly known as AIG, Gerber, Transamerica are the main ones that at least I'm familiar with.
Mhm. Perfect, man.
Followed by credit card or debit card recurring payments. Same thing. You might get somebody that says, yep, Paul, I really want this coverage, but I don't do auto pay. I'm on top of my finances. I pay all my bills manually every single day. I have alerts for it. For those people, you might want to be able to have that ability to say, not a problem. We don't need to be able to have your auto pay. We could do it by credit card or debit card, whatever your preference is, speaking to that client. The top two, AIG and Gerber, they allow you to only provide that credit or debit card for the payment for their policy. The bottom two, the client can still have that as a payment, but they still need to collect the banking information for legal purposes for that specific carrier. Those examples will be Mutual of Omaha and Transamerica. I explained to a client something on this nature. Hey, I agree with you, Paul. My job is to make sure we set you up with the best possible plan that works perfect for you. So if you do want not like to have the auto pay, that's fine. But for legal reasons, these carriers do need to have the banking information just for federal law purposes. But I'm making a note on your file that you only want to have it for the recurring payment for a credit card, and I will take care of that personally. I also have to add on for my clients. I'm going to call them first thing in the morning just to make sure that happens for you.
Got it.
And lastly is the I-10. That's just government issue identification information to be able to also provide coverage for those individuals that might not have the full citizenship yet, but they can still be able to provide coverage for the family. We don't want to call them out. We don't want to be able to not be able to have them get coverage for their family. So we have coverage options for them as well. Everybody can always have options. That's the beautiful thing about being a broker now. There's honestly a very small margin somebody you can't be able to cover. And that small margin is so rare that I can't even think of too many situations where that might come up.
And just to preface this for people, you really don't want to get to the point where you're collecting through debit or credit card. It's usually a chargeback waiting to happen. So this is, I would reference this. This is like last case scenario. You definitely want to go for the bank draft. That's going to be something that is likely to stick, and you'll have less problems. You don't have to chase after it. So I just want to preference that. Yeah,
of course, it's a tools in the tool belt type of scenario. I'd rather agents have it and not need it than need it and not.
Exactly. All right, so we kind of went over health pivoting. Man, appreciate the cheat sheet. I don't think anybody's got that as well set up as you do. Let's go over pivoting on finances. What kind of scenarios do you type in? Actually, you know what? Somebody did come up with one that maybe we can tackle. It was Courtney. She said, yeah, they have large assets, multiple houses, investments, and they say they don't need this.
I am all about filling the gap, to be honest. Let's start off with that. I want to be able to sign if they have any kind of insurance, why they're using it, what they originally got it for. I want to be able to sign any kind of financial investments or any kind of financial situation that they do have to be to find out what honestly I can even do with them. I don't want to be a peddler just shoving some kind of product to them and just hoping that it makes sense. I want to be a consultant or whatever kind of adjective you want to be able to describe it to be able to kind of help them make that kind of pair. So let's say if they do have something, they have something that takes care of their income as far as the income replacement. Well, let me back it up a little bit. My main categories in my brain, I'm trying to cover final expenses, funeral arrangements. I'm trying to cover income replacements. Let's say if they are a couple that just has a minor children that's still relying on their income, I'm trying to recover income replacement. And as well as I'm trying to cover their mortgage as far as my main three categories. As far as on the simpler level. Final expenses.
Let's back it up even further.
Let's go.
It's a thought process. Like you have to start. This is the most powerful weapon. Why would they fill out a mortgage protection lead, or why would they fill out anything for insurance if they weren't interested? Right. So that's my first thought process. Right. And I will go so far with the client. It's like, okay, what were you thinking when you were filling it out? What was sort of the idea? What was your goal?
And that helps you out. Some agents don't think about it.
And people are afraid to hit straight on, but hey,
don't try to wing it.
Yeah. Why? Right. So then it kind of helps you break down, right? Michael threw in a rebuttal right away for that. I thought I had to fill it out, right? Typically, that doesn't happen, Michael. They get like 26 or 28 of these in the mail. But let's say that was the issue, right?
And for that kind of scenario, I honestly have a blanket response for that, because just because that scenario, because of the type of lead sources that we work, you're not going to get it too often. But for any kind of, I thought I put this out, I don't need this anymore. Maybe I don't really have time because I want to do this next year, 5 years from now. I kind of have a blanket response where I kind of want to take the pressure off of it. I want to get out of they think I'm a salesman trying to peddle them something. Once again, I am centered on, I'm a consultant. I'm here to kind of just help you with information. That's my job. Right. As long as I help you with the proper information, I explain it in a way that it makes sense to you. It's up to you to understand that, yes, it makes sense. That's what I need. That's me being a good representative of a good agent. Then by the time we get to the closes or quotes, whatever you want to call that on the back end, it's not a question of are they going to agree with it or not, or do they want to quote unquote purchase this product that you're showing them. It's more of making sure it's within their budget. So as far as how I'm going to kind of line up in that, whenever they kind of hit me with that general, honestly, rare rebuttal, no matter what kind of rebuttal it is, I'm going to say something along the lines of not a problem, or I understand sometimes that does get confusing. My job is just to review the information with you, just so you know exactly what you have available. That's what came across my desk. And then from there, best decision possible. As long as I can just check it off my box, I did my job. Is that fair enough? Add a little extra razzmatazz. I'll give you the quick version just to make it a lot easier for you, just to make my job easier as well. And what's the quick version? The same script you would always say, because who do they know what you're supposed to say in the beginning?
What do you actually say, razzmatazz?
I don't say harassment test. Just add a little razzle dazzle.
All right, keep
You
going,
gotta
man.
make the job fun, man. It's in my brain. Sometimes I'm doing that, I'll kind of look over into the Zoom if I'm presenting, and my agents kind of know what I'm doing, so they kind of like giggle a little bit in the Zoom. Add a little razzle dazzle.
All right, so let's kind of get back to answering Courtney, right? So basically, they have multiple houses, multiple investments. They say they don't need this, right? What's a pathway to kind of helping the client, or maybe not helping the client, figuring out where the holes are in coverage for the client?
Like I said, filling the gap. For whatever they have, hey, you have this investments. What are these investments covering for? I'm assuming, are they covering for to cover your house if you were to pass away? Or are they covering for your retirement to make sure that you're going to be set up for your family in the future? We don't want to have one bucket take from the other bucket. So the very first thing is actually assigning the actual gaps and honestly keeping it very more simplified. A lot of people try to overcomplicate it. They hear those kind of rebuttals and they try to just go frantic mode. Oh, but you could do this, or you could do that, you could do this. I'm going to keep it real casual, nonchalant, to be honest. I know some people don't like the term nonchalant, but I use that in a term of meaning that I'm not trying to be a shark in the water, trying to have that aggression over the phone. I want to be more of a casual saying, I'm surprised you wouldn't have that. All my families have something in place. I'll be more scared, Paul, if you didn't have something with this or with that or with this or with that. And
you got more to lose.
Exactly. And then it's keeping up with the Joneses. For all the people in your same situation, this is what they do. That's my blanket kind of demeanor, how to go over it. And then honestly, fill the gaps. It's kind of hard to kind of say a guaranteed answer of how to answer it, because there's so many different ways you can go about it. I'm all about more training and teaching the process about how to go about it. Then the natural way of the conversation will kind of fill itself. How you kind of fill the gaps, you fill it whatever like I said, the buckets, or you're going to assign what they're using it for. To figure out whatever they don't specifically assign that for, then that's what we're going to cover with it. If you want to do really advanced markets, saying, hey, if you really cannot help them out with a life insurance product to fill in those gaps, you can go advanced market with annuities, IULs, and we have our certain kind of agents in here that are very well versed in it. Ty, Royce, they kind of help set up a follow-up appointment to be able to get more advanced market as far as, okay, they might really be covered for it. So once again, I am going to peddle and force a product that they don't need. To me personally, I'm not a hard closer to just give them a product knowing they don't need it. I'm not going to do that. But if you don't need these products, if I'm not well versed in advanced market products that you do know, the good thing about our group is we got somebody who is. So you know what? This is what I would advise. We have a resident expert in that. I'll go ahead and help you connect you with that person.
Yep. And shout out to Usman. You shouldn't get that a lot unless you're doing HOF or calling leads. That's exactly correct. Yeah. Let's go over kind of a tech savvy pivot, right? So you got a client, they're older, not exactly good at, maybe signing the application or anything with tech. What's sort of your process with that? And let's say let's make it a little even more difficult. Let's say it's a $10 or $15 a month change.
I was just about to say that. I have a threshold of $15 max. 5 to 10 is like my comfortable. If I could have a $5 to $10 margin difference between the carrier options, that gives me more peace of mind and honestly morality peace of mind to be able to pivot comfortably, knowing I'm not, honestly, for lack of a better term, screwing over that client. That's what we want to avoid at all costs. So as long as I have a 5 to 10 realistically, I honestly don't want to go over 10 unless it's that big of a difference. I want to be able to see what I have. Okay. Am I speaking with a client that, they might be able, like I said before, they might be able to figure out the whole email signatures and all that? Okay. If it's within that 5 to 10 bucks, I'm not even going to be able to risk it. I'm not going to want to try to risk it. I'm just going to pivot over to, like I said, the Aflacs, the Aetnas, the Americos, if it's within that reasonable premium. I've had those instances where I know this is going to be a pain. I'm just sensing it as I'm going through the conversation. I'm going to spend about a good amount of time on this. I would like to go with a text authorization, but it's a $30 difference. It's a $50 difference. That has to come to you being an agent, actually also caring about that client, what they're paying on the month-to-month basis. So now instead of me going text, I might go with, hey, I'm going to walk you through it. I'm going to help you out with the process. If you're not familiar with it, guys, we do have access with our binder to have a signature walkthrough where each exact carrier, they have examples of that Harold has put their work into, where he actually has the actual process to literally read it word for word, just like the toolkits, to be able to talk a client how to sign any products. If it's a Mutual of Omaha, a Transamerica, an American Amicable, doesn't matter. All you do is go into our binder that has all the sources that we use for how we actually present with our clients. You search in signatures, I believe it's called how to. You just literally read it word for word. I see Michael here mention that.
He's seen it. HD.
It's bookmarked on my page. Even if I know how to do it, I still pull it up just to make sure, because I want to make it as efficient as possible. I try to wing things very minimal.
Minimal as possible, right? Yeah.
Minimal as possible. I'm a very
Yeah.
simplistic guy. I'm over.
Preparation, man, preparation is everything.
Hmm.
So, so your go-tos for tech savvy is Aflac, Aetna.
Edna first, to be honest, because it hits a lot of the things on the head at the same time. With Edna, people are not familiar. Not only is it going to be a text authorization, so you have the ability to send a text message, but they have
Mhm.
the ability to, principally, if a client cannot get approved for one tier, you have the option to select on the application that the client is willing to accept another tier to get approved. With Edna, they have
Yeah,
the
I like
preferred
that.
tier, they have standard, and they have modified. I got this from Zach as far as like the being the one of the fan favorites. And throughout my own experience, I'm kind of hard headed sometimes. Sometimes I got to learn on my own. So I kind of like learned on my own a little bit
Nah,
after
man,
he
I
spoke
didn't
to
ever get
me.
that from you.
Never. Oh, I don't know, man. Yeah, thank you for that. But with Aetna, though, let's say if a client might come back with saying they can get approved with preferred or approved with standard, whatever the case may be, but you like, hey, I'm hoping you're telling me the truth, but I'm sensing you might be leaving something out. Aetna might be my go-to because I don't have to worry about putting in multiple applications because those applications only have one tier. They either get approved for it or they don't. Now I have to pivot. With Aetna, it gives me a little bit of a wiggle room. I can just discuss it with that client because I can know based off their budget. With Aetna, you have an option of any of these carriers. You can either say, yep, first of all, it's a yes or no box. If this client would be able to get approved with another tier, do you want us to automatically basically approve them for that tier? I usually always select yes. For the following box, I want to be able to give my client a heads up. I don't want to just assume anything. So I'm going to basically discuss that with them. If I'm having any kind of reluctancy that, hey, they might not get approved for this, I basically give them two principal options. On the application, they can either keep their face amount, but it's going to change the premium to keep that face amount, basically meaning the premium's going to get a little bit more expensive if they want to keep it, or they can keep that premium, but vice versa, it's going to lower their face amount because they want to keep that lower premium. So if I'm speaking to a client and let's say budget is not an issue, they want this coverage. We went over the financial inventory, they can afford it more than enough. I'm going to discuss that with them in almost an assumingly way. Okay, so if something were to happen, if they come back with any kind of result from the Medical Information Bureau when they do the health checks, we want to make sure you get that coverage. It might be a slight rate up. If we get that rate up, Paul, I'm going to make sure I call you as soon as possible just to make sure you're okay with that, and we'll go from there. Does that sound fair enough? And I'm going to make
Yep.
sure they're okay with that, so they don't get surprised if their premium is $15 more than I quoted them.
Yeah,
Vice versa, if their budget's really tight and we went over option 1, 2, and 3, and they say, "Yep, we option 3 because X, Y, and Z, whatever the reasons are," I might go
there's
with the
no
latter.
sense. Yeah,
I'm gonna go with making sure that hey, we want to make sure that this is the budget. They can't go over this. So Paul, if we
yeah,
can get this covered for you, I'm gonna make sure it fits within your budget. If they
yeah.
come back saying that for whatever reason, your premium might have to make your coverage go a little bit down, it's gonna be okay. Because like I said, Paul, our main concern is making sure you get approved, get your foot in the door. Because once you're approved, Paul, I'm gonna be representative for life. We can always bump up your coverage later on when it's more comfortable. So
Mhm.
I'm saying that kind of line all throughout the presentation because I'm assuming the sale as we're actually going. I'm saying that by the time we wrap up this call, you're doing something with me because I'm going to be contacting you in the future. You're going to be having to reach out to me in the future. So no
Right.
matter what, I'm going to help protect you in the best way possible for right now. But since I'm your agent for life, we can always make adjustments in the future. Does that make sense?
Yeah, absolutely. So, we got a little bit more time here, and I wanted people to, if you have a one-liner or a pivot that you use for mortgage protection of going from total payoff to pay down, throw it in the chat. We're going to go over those in a little bit after you guys put those in there. But one thing I wanted to touch bases with you, and this is going to be kind of a surprise to you, Anthony, because we didn't talk about this ahead of time. But closing, cementing, right? I think it's something we don't talk enough about in regards to retention. There's a few of us that have high retention. I think most of us are the ones that have been in the field before, seem to maybe have a higher retention in numbers. Can you kind of go over your cementing after you got the sale, and then how you make sure your retention stays high?
To keep it very simple, in all of our scripts, no matter what kind of a lead that you're working, there I have a cementing script that you can just honestly follow along. I always teach my new agents, I'd rather you be very, very basic and boring and just say the script to know that it's cemented instead of risking anything.
Mm,
Above and beyond, I want to assure that the client that I'm their agent for life. So no matter what changes that they have, reach out to me. Reach out to me before honestly they reach out to the company. If you
mm,
need to make any changes from address, beneficiary, or coverage amount, you can do that. I don't want them to think that, hey, I'm this big bad wolf with they are scared to call me if they want to reduce their coverage. Or they
right.
have to pride with saying, hey, I can't afford what we closed on. So I'm going to call the carrier and just cancel it because now I'm nervous. So as I'm cementing on the simple level, I'm just reading the script. I don't overcomplicate anything. Above and beyond, I'm giving the client a surety that no matter what happens, no matter what your change is, call me because I'm going to be your agent for life. And then when you get that paperwork in the mail, write it down, give it to your emergency contacts, write it, save it to your
Beneficiaries.
phone, I say, hey, yep, say my name is Anthony Ferguson. You could put agent before or after, just in case you forget my name. Don't feel bad in the
Yeah.
future. That's on a simple level. That also opens the door for referrals. If we can kind of like, pivot over to that a little bit. Emergency contacts is the easiest referral to have. Hey, Rob.
Before
Hey,
we get
Paul.
into the referrals though,
Go
I
ahead.
just
Go ahead.
finished
I
out the
just hit
cementing,
my brain a
right?
little bit. I
Yeah, no,
couldn't
no,
not
no.
mention.
And you're
Could
quick,
not
bro. You're
mention.
quick. Yeah. So if your client calls you, emails you with a situation, pick up the phone, answer your client. A lot of people think once I sold this, I don't have to deal with it no more. If you do not pick up the phone when your client has issues, you don't have an opportunity then to fix the issue. And it could be something simple. I need to cancel my policy. Well, if you answer the phone when they call you to do it, you might be able to, instead of getting it canceled, maybe reduced or something that's more affordable, and then you don't have the full charge back, right? Not only that, the client has coverage still, right? But you don't have opportunities if you don't follow up with your clients. And I think that's a big mistake I see a lot of agents go through is that they feel like, okay, well, there was nothing I was going to be able to do anyway. So I'm not really servicing the client. It's like a sell and done type of situation. But if you answer the phone, that client is most likely to give you referrals because they believe in you, right? That you're there for them. And that's what people really want. In a technology world that we're kind of going into, most agencies have a sales group and then a customer service group. And everybody hates calling the customer service group. So if you can solve both those problems by being their agent for real, you're going to have a high retention. That's
Full
my personal
transparency,
belief.
Paul. Even I, throughout how much experience that I have, I get nervous. Why? If I just close you, Paul, the very
Mhm.
next day you're calling me. Oh crap!
Mhm.
Why is this guy calling me? I thought I did
Yeah.
great. I get
Yeah.
nervous. How many times has it been? I just answer the call real casual. He's like, "Hey, Anthony, I just want to make sure. What was the option that we chose? Something
Yeah.
simple. They just want to confirm
Something's
it.
crazy. Yeah.
And
Yeah.
what was the draft date that we did? I just want to make sure the money's in my account. And I get breath now. Ooh, okay, that's all it was. Oh, this is what it is, Paul. I get off the phone.
Mhm.
Why was I so nervous?
Yeah.
Sometimes you just worry about something that's never going to actually happen. Just go to it with confidence. As long as you know you did the best thing for the client, what are you nervous about? Now, if you're nervous, maybe that's something you need to
Yeah.
discuss with yourself. But why am I so nervous to talk to this client if I did the best thing
Mhm.
for them?
Yeah. All right. Now shoot us with the referrals, my guy. Sorry, I didn't mean to stop you. I just want to get
Oh
ahead of
yeah,
the
I know. No, you're fine. I know this call is more about pivoting, but I feel like since we mentioned it, it should be discussed
why
because
not? Yeah.
it's something that we our team is very blessed to have such access to so many leads. Well, let's be
Yeah.
honest, we're spoiled. That's a
Hella
very small
spoiled.
fraction of
Yeah.
that do
We
referrals.
come from a place where referral based leads was the most
We
important. And
come from we were getting 30 leads
yeah.
for a month and
Yeah.
make it work.
And make it work. Yeah.
Make it work or make it work. Because don't
Yeah.
go back to your manager asking for more. They're gonna laugh you out the office. That's where we
Yeah.
come from. So
Yeah.
a easy way that Harold has always taught me was their emergency contacts. That is a zero stress way of getting referrals. Hey Paul,
Yeah.
we discussed X, Y, and Z. We're talking about beneficiary, excuse me, and emergency contacts. So of course, for your beneficiary, we need to make sure that they understand your coverage. We want to make sure there's no issues with the payout. So Paul, what we typically do, we want to do a
Mhm.
quick policy review with your beneficiary, just so they know exactly how the coverage works. If they have any questions, is that okay with you?
Yeah.
Nobody said that. That's bare minimum one referral every single household, and that's only if you have one beneficiary, let alone if you have multiple plus contingents. Bare
Right.
minimum one referral right there. Emergency contacts, Paul. The worst thing that we ever experience is if something does happen to you, your emergency contacts have no idea who to even call. How many times have I even talked to a client where they say, "Hey, I don't even know if I have insurance or not." My agent hasn't called me in years since I talked to them 5 years ago. Our main focus is to make sure that if something does happen, God forbid, knock on wood, your family, your friends, whoever is the most dearest person in your heart, the person that you make sure you got all this protection for, we're making sure that they know who to contact if anything happens. Hopefully not the worst case scenario, but no matter what,
Absolutely.
my name and my direct cell phone number. They can call me 24/7. So I'm going to be doing the same thing with them, Paul. Is that okay? Okay,
Yep.
perfect. Bare minimum. Above and beyond, hey, Paul, I'm going to put us in a quick group chat just so they know who I am, do a quick introduction. I'm going to send them a quick little paragraph. Hey, so-and-so, this is Anthony. I'm the agent for your brother, your father, your uncle, Paul. We just want to give a quick introduction just so you know exactly who I am. So if something happens in case of emergencies, you know how to contact me. I send them that group text. I ask Paul while I'm still on the call, hey, Paul, did you get that text? All right, go ahead and spawn back, hey, or I got it, just so I know you got it. So that's that much more a solidified referral because not only am I introducing myself, I'm introducing myself with the client who that person knows. And
Yeah.
that person then now also gave me credibility saying, yep, this person's legit, so forth.
And just to be honest with you, and it's something we were taught at the practice company, and it rings true, is referrals is the best lead. Yeah, you don't have to worry about credibility because someone else is vouching for you that they're related to or they're close with. And typically they close at a much higher rate and the retention's higher too.
Engine is much
So
higher.
there's no reason why anybody shouldn't be getting referrals, right? In an industry where we buy our leads, why not get free leads?
That's what I was gonna say. Why not
I
also
just,
minimize
I
your
just,
overhead?
yeah,
If you're
it's
spending 500,
what
1,000, $200 when you're first brand new a week, that can get you a lot farther where you can double
absolutely.
your leads that you're not even paying for. And
And
that's more
here,
solid to show up and to be able to close.
especially those of us that come from the practice company, that we always talked about it being our own business, and it wasn't. This is our own business, so why not lower your overhead,
Mhm.
right? That's more profit for you, right? That's healthier for your business. So yeah, man, great stuff, Anthony. Um, if you can, I'm gonna wrap things up, and if you could stay after we stop the recording in case people have
Bro,
questions, about 10 minutes, would that be all right with you?
I'm hanging out with you, my guy.
All right. All right. Hey, man. Thanks again, Anthony. I appreciate you coming on, short notice here to bless us with, your wisdom. Thanks for coming. And everybody else, see you next time.
Yes, sir.